Let's check in now with trader Todd Colvin of Ambrosino Brothers. Nice to see you, Todd. You have your eyes firmly on the bond market. What are bonds and maybe the dollar signaling about the stock market?
I think the higher the yields go, it's going to bring the Fed in. And will the Fed then be the catalyst that forces Treasury yields lower? And that will only push stocks higher. So I think the market here is anticipating that the Fed isn't going anywhere and that they may have to up their game in buying Treasuries and keeping those yields from rallying any much further than they did a few weeks ago.
The Nasdaq is off its highs. Do you think that's out of fears of a Fed rate hike?
No, I think that the Nasdaq, which has enjoyed a tremendous run here, the technology sector, it's more of a post-pandemic era where technology, while it is still used in our everyday lives, maybe doesn't get the focus that it's gotten over the last year and going back to more normal times. So while we did see a lot of these tech stocks get hit, they have rallied, they get hit again, they rally. It becomes more of a stock pickers trade than it does because of the fact that when we see Treasury yields go up, it's going to take away from the stock market. But these technology stocks are going to be driven by what happens post-pandemic. Right now, it's still very unclear. So a lot of this trade is off what we're talking about, going back over the last year. And that's hope and optimism. And right now, we're just not seeing all that in the technology sector, given the fact that we're going to reopen the economy. What
trends are you noticing in gold and silver?
Well, as you look at the charts, gold and silver have struggled to maintain what we consider to be a rallying gold and silver market, with the Fed keeping interest rates low and with them being in play for the foreseeable future, not to mention the inflation avalanche that's coming at some point down the road. Now, one of the reasons that gold has been struggling, yes, has been the higher yields. When we talk about higher yields affecting other areas of the equity market, it certainly has its effect on metals and gold as well. But I think the big obstacle to gold moving forward, and actually has been really over the last year or so, has been Bitcoin. The new digital gold has been stealing a lot of the luster. It's gotten a lot more press. It's getting a lot more fanfare. And if you look at the charts, it's seeing a lot more price appreciation. So at this point, a lot of things that are going to be keeping gold from going higher in an environment where historically it has thrived.
Thanks so much, Todd, for the Trader Talk.
Oh, thank you very much.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.